What's up guys, Ben here and welcome to Motivation to Invest. Breaking news, oil prices are at an all-time low of less than $40 a barrel. The IEA saw the largest drop of oil demand in history this year before the biggest ever one-year jump predicted in 2021. So if oil demand is predicted to increase in 2021 and it's at a very low cost right now, then could this be a great opportunity for value investors? Now, I have many of you guys message me on this channel and you say, Ben, you're always talking about tech stocks and momentum plays, but what about traditional value investing? Are there any opportunities for traditional value investors, those of you who are contrarians and want to bet against the consensus? Well, now this low price in oil could mean it's a great opportunity to get some good value in some oil stocks because volatility can equal opportunity. So in this video, I'm going to deep dive into the oil industry, analyze why oil prices are so low, and also highlight 3 potential stocks which you guys could invest in. So if you're ready for that, let's get into it. So what determines the price of oil? Well, the price of oil is determined by 3 main factors. We've got supply, demand, and cost. And that is the cost of drilling and production. So this is basic supply and demand economics. When demand is low and supply is high, we get a decrease in prices, which is exactly what has happened right now. During the first quarter of 2020, when the planet was put into lockdown and people were forced to stay at home, people were of course driving less, filling their cars up with gasoline less, and thus the demand for oil dropped massively. The aviation sector also saw a massive decrease in oil demand as no planes were allowed to take to the skies.
Break left! I'm hit! We're coming apart!
But now as the economy is starting to recover and cases around the world of the notorious virus have started to stabilise, shouldn't oil demand also be increasing? Well, according to the IEA, they said demand for 2020 is expected to fall by 8.1 million barrels per day in 2020. However, it will grow by 5.7 million barrels per day in 2021. In sporting terms, the 2020 oil market is now close to the halftime mark, the IEA said. The main industry which is expected to drag oil demand through 2021 is aviation. The IEA said that next year oil consumption would remain at 2.4 million barrels per day, lower than 2019 levels, mostly because of the ongoing weakness in jet and kerosene demand. That's because the aviation industry is facing an existential crisis, noting that jet and kerosene demand is likely to remain under pressure well beyond 2020. Data from the International Air Transport Association, the trade association representing 290 airlines and 82% of global traffic, show that passenger traffic will be nearly 55% lower in 2020 compared to 2019. As you can see from this other report by the IEA, oil is used 68% for transportation, 26% for industrial uses, 3% residential, 2% commercial, and less than 1% for electric power. Even though the world has started to open back up and people have started to drive again, aviation industry is still undergoing tough times, which is why we see such low oil prices. So that's on the demand side. We've established demand will be lower due to the aviation industry. But what about supply? Well, supply is also at an all-time high, which is affecting oil prices. One of the main reasons of this is that the United States, due to its multiple fracking operations, has become the #1 supplier of oil in the world. So from this chart here, we can see that in 2019, the United States produced over 15 million barrels of oil per day. And in second, we saw Saudi Arabia producing 12 million barrels of oil per day, followed by Russia, and then we have Iraq, Iran, China, Canada, and a few other countries in South America. But the United States suddenly producing 15 million barrels of oil per day is going to have a massive effect on the market. So we've established supply is high and demand is low. Thus we have declining oil prices. However, if you believe the aviation sector will recover in the future and people will start to travel and fly again, then we could see oil prices stabilise. And many analysts confirm this belief, with the global oil demand for 2021 expected to reach 97.1 million barrels of oil per day. Now I know what you're saying to me, you're saying, Ben, what about electric vehicles? Isn't the world going electric? What about Tesla? Correct, the electric vehicle market is expected to grow, and I do envision everybody driving electric cars at some time in the future. However, in the medium term, for the average consumer, if you're pulling up to a gas station and you see oil prices and gasoline prices at such a low level, then would you be inclined and go out and purchase an electric vehicle when you're saving so much money on gasoline? And the same goes for large trucking companies. Why would they use a conversion kit by someone like Hyliion to convert their diesel truck into an electric vehicle when diesel prices are at an all-time low? As far as economics are concerned, it just doesn't make any business sense. Of course, regulatory incentives could help to encourage more people to turn electric, but in the short term, if it's about cost and if somebody is running a business, they will try and keep those costs low. Thus, if oil demand is expected to increase in 2021, then could buying some oil stocks be a great play right now? Well, I did a previous video 3 to 4 months ago on the entire oil industry, and I did a deep dive into many of the stocks. And the conclusion from that video, safest companies to invest in during these times of volatility are well diversified oil giants. And these are those companies which are diversified in not just oil, but gas. They have multiple subsidiaries and they're complete titans. Those companies are the safe bets if you want a value play on the oil industry. Stay away from the small cap, highly leveraged, high debt oil companies because they are extremely exposed to lower oil prices. Let's say their cost of drilling and production is $30 a barrel. And if oil prices drop below that, then these companies suddenly become unprofitable. So that is the major risk, especially with the smaller cap oil companies. But there are 3 companies which I think are great bets if you want some exposure to this industry. Now, it is high risk and it is a contrarian play, but there's tremendous upside. So the first stock on my list is Shell. So diving into the numbers for Shell, we're here on Stockopedia. If you guys don't know, this is the platform I use to analyze stocks. If you want to try out this platform, see if it fits your investing style, I've got a 25% off discount link. I'll leave that below. You can check it out. It's exclusive only for the viewers of Motivation to Invest. With that being said, let's go into these numbers for Royal Dutch Shell. We can see the share price is currently around $1,000 per share. Now, to put that into perspective for everybody, in the March the 17th, bottom of the crash, dropped to 970. So it's very close to the same price it was during the March crash. A lot's happened since then. We have vaccines being developed, economy is moving forward, people are traveling more, even people are flying more. Yet, as far as the stock price goes, did increase by around 20%, and then it's decreased again back to $1,000. That's one big reason why this could be a great value play for investors. Total revenue, $239 billion in revenue, which is incredible. This is predicted to increase in 2021. Current ratio, now this is something to look for, and this is the risk of a lot of these companies. Current ratio is basically short-term debts to your short-term cash. And it's basically, can this company pay off its short-term debts within 1 year? Generally, I look for companies with a current ratio of at least 1.5 to possibly 2. Because if a company's got a current ratio of 2, it means it can pay off its short-term debts at least twice. A lot of the smaller oil companies, they have a current ratio less than 1. That's because they've got so much debt which they accumulated prior to the global health crisis. Oil prices were at a high level, around $60 to $70 per barrel. These companies were stocking up on debt, expanding their production facilities, and hoping for massive profits. However, when the health crisis hit, their fixed cost, let's say their cost of drilling and production, is $30 per barrel. Then if oil prices are only $37 per barrel, they're only making $7 a barrel on oil. Thus their bottom line is affected massively. So that's why if you want to invest into the oil industry, it's best to look at these large, diversified companies. What about the analyst consensus? So the analysts here, 1 say sell, 11 hold, 6 buy, and 3 a strong buy. So this is a lot more leaning towards a buy for Royal Dutch Shell. P ratio, 13.4. So that's your price to earnings ratio, fairly low for oil. But what you should really look for in cyclical stocks is the price to sales ratio. So the price to sales for this stock is just 0.43. So the lower that number, the better. Now, just full disclosure for everybody involved, I do have a small stake in Royal Dutch Shell, and I did purchase this in March, probably 17th. I got this around $970, I believe, $970 to $1,000 a share for Royal Dutch Shell. It did increase by 30%, and I made a nice healthy profit. I sold off a small portion. I made a decent profit. I kept some in, and that's obviously declined now to $1,000 a share, but it's back at these levels. So that could be a great opportunity for you guys to get in there. The other stock, if you want to look for another diversified stock, so I've got 2 more stocks. BP. Personally, as far as the numbers are concerned and the layout of the business, I don't believe it's in as good of a position compared to, say, Royal Dutch Shell, but they're still a good company if you want to play on the oil industry. They're a big, diversified titan of the oil industry. Stock number 1 on the list, this one is great for US oil investors. We've got Chevron. So Chevron is another titan of the industry, a diversified company, but it's not as good value as Royal Dutch Shell. Current ratio 1.14, so that's not as good as Shell. Brokers are moving towards a buy though, so 1 sell, 9 hold, 11 buy, 4 a strong buy. So we've got people here from Credit Suisse, Goldman Sachs. Price to sales 1.3. and P ratio of 40. So Chevron is an option, but it's not as good value as Royal Dutch Shell right now. Do the analysts agree? What are the analyst price targets for Royal Dutch Shell? Well, analysts believe that the share price will climb to 1,660 pence per share. So it's just at 1,000 at the moment. They believe it will go to 1,660, which is a premium from the current price of 1,000. Credit Suisse analysts expect the shares to rise to 1,600, and JP Morgan analysts believe the shares will climb to 1,700. So guys, with this investment into Royal Dutch Shell, you can potentially double your money. It is a long-term play. It is risky in the short term. There will be a lot of near-term volatility, but let's be honest guys, do you think the whole industry is going to be destroyed off the back of this health crisis? If you do, stay away from oil. But if you think no, of course people are going to fly again, cruise lines are going to start operations again, people are going to start traveling more again, then it's only reasonable to agree with these analysts that oil prices will increase once again. Now today's video guys is sponsored by eToro, and I want to dive into eToro because it's a great place for investing into oil stocks, investing into commodities, investing directly into oil, because I always get asked, Ben, how do I invest directly into oil? eToro is a great platform to do that. It's also one of the market leaders for buying and selling cryptocurrency, and they've even got some cool features such as copy portfolio, where you can copy traders' portfolios. So I'll dive into eToro now and show you the platform. It's completely free for you guys to use. Here we are inside eToro. I've just got the price of oil up here. We've got the chart, so you can have a look at the charts. You can see we're around $37 at the moment. It was around $70 in 2019, October, $70. If it got back to those levels, you'd obviously double your money if you invested into oil. However, looking at the chart, it does seem to be on a downward trend still. What other features does eToro have? Firstly, eToro, it's a very social platform. So as you can see here, people will post about different stocks. There's someone here posting about Tesla. You can post, you can ask questions. There's an entire community on this website. It's basically the social media equivalent of Facebook, but for traders and investors, which is quite cool. So you've got all your normal stocks you can invest in. You've got Apple, Google, Amazon, a variety of ETFs, and of course crypto, Bitcoin, Ethereum, XRP, Litecoin. What I love about this platform, if you're into crypto, you don't have to sign up to a specific crypto platform such as, what was one I used to use, Coinbase. I used to use Coinbase. You just have to sign up to a specific crypto platform, go through all the verification process just so you can buy some Bitcoin. Whereas with this, you can buy stocks, you can buy Bitcoin, you can buy Ethereum, you can buy ETFs, you can buy it all really. Commodities, indices, you've got the German market here, the NASDAQ, Dow Jones. You can do currency exchange, so you can trade with currencies, you can do Forex, gold, oil, silver. It's got everything on here. Probably the most unique thing about this platform, follow people who are successful traders. You can look at their track record, you can look at how much they gained in the past few days. So let's say gain 10% during the last, let's say, month. So we've got a few different people here, and you can follow these people. You can say, okay, I want to follow this guy. He seems okay, he's made 18% in the past month. And you can follow people who you think would potentially help you to increase your portfolio size. It's also a great way to learn. Here there's top traders portfolios, sharp traders, active traders. So these have made 21% in the last 12 months. This one's quite good, the 4 horsemen. So you've got Apple, Alphabet, Microsoft, Amazon, 4 fantastic companies. That return would be 71% if you invested direct into that portfolio. Crypto, you've got crypto, equally split crypto portfolio on this platform. I'll leave a link below, and if you guys wish to try out eToro and see if it fits your investing style, then you can check it out. If you do sign up, it's completely free, and when you deposit $1,000, that will also help the channel out, which allows more videos like this to be made for you guys. But it is a fantastic platform. It's free to use, free to sign up, so it's not really going to cost you anything. So personally at the moment, I love the community side of it. I love the fact that you can just speak to different people, you can speak to different traders, you can look at trends. Great platform for active investing, great platform for trading, great platform for learning how to trade. You've probably seen their adverts where they say, be like Dave, because Dave just copies Steve's portfolio. Steve's making a killing doing trading, he's been studying it for years. Dave just copies his portfolio on eToro, and he makes an absolute killing. But that's it for today, guys. Let me know your thoughts on the oil industry. What do you think of it? And let me know your thoughts on the eToro platform. What do you like most about it? Let me know in the comments below and I'll join in the discussion. And if you enjoyed this video, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. And if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I will see you guys in the next video. Invest safe.